Ready? Okay, good afternoon. We're ready to start the second part of our briefing. Colleagues, we're going to have a Financial Institutions 101 from the Maryland Department of Labor, Office of the Commissioner of Financial Regulation. Mr. Salazar, good afternoon. It's good to see you again.
All right, good afternoon. Yep. Perfect. Good afternoon, Chair Griffith. Thank you very much. Members of the committee, thank you. Pleasure to be here this afternoon. I appreciate the opportunity to go over a 101 on finance and the Office of the Commissioner, which we call OCFR for short, or sometimes just the office. With me today are our Director of Legislative Response, Amy Hennon, who's going to be helping me out here, keeping me on track. Some of you know Andrew Fulginiti, who's also with our office. Andrew will be taking up the Student Loan Ombudsman position as well once we do transition. And then Sharifa Balogun is also our new Assistant Commissioner for Non-Depository Supervision. I brought them all along. I'm going to do the primary part of the presentation because it turns out I'm the most senior person here now because Amy and Sharif have just started. I don't want them to get tagged with any of the older stuff, so I'll take responsibility for all that. So appreciate, again, the opportunity. Our office is part of the Department of Labor, as the chair mentioned. Our budget is approximately $13 million, which 98% of which comes from special funds, funds funded by the depository institutions, banks and credit unions and trust companies, and non-depository institutions, which are typically licensed or registered through our office. Our office also contributes money back to the general fund through the collection of fines and from other regulated industries and penalty assessments. So while we're also an administrative agency, our office is here to provide you, as legislators, with any technical advice or information that we can on the financial services industry or players here in the state of Maryland. So feel free, as you're putting together your legislative packages or any goals you have in the financial services field, to reach out to me or my staff. We're always available and happy to help out and provide whatever information our office can. So next slide, please. What are we talking about when we go to financial regulation, when we're talking about that? Well, at its highest level, we talk about two different things. One is the regulation of depository institutions, as I mentioned. Those are banks, credit unions, trust companies. And then on the other side, they're so-called non-depository, for lack of a better word. They're regulated financial institutions, but they touch almost everyone in the state of Maryland's financial activity, whether that be mortgages, money transmission, mortgage collectors, debt collectors. It's quite a length. We also use a new modern regulatory system to register institutions, those non-depository institutions. You'll hear me talk a little bit about that. And as a result of the course we've taken over the last few years, we're able to make more information available electronically. So we put together information off the foreclosure data regulatory system on our website, and it's also available on the Maryland Open Data Portal. And we've also been working with some local jurisdictions as well so that they can get appropriate data if they need them. Our office has the consumer protection aspect to it. I'll get into that as we go through. We have two other kind of subunits. One is the Collection Agency Licensing Board, which licenses all the collection agencies. And as I mentioned, the Student Loan Ombudsman. Ombudsman McAvoy was there before. He was very active in that, stood that off, keeping us looped into the federal efforts on that and reaching out to state institutions. So we'll talk a little bit about that. Let me just say at the end, on our website, we have all our annual reports. We have the reports of the Ombudsman. Our office was tasked with providing a couple of specialized reports in the last few years, and you can find all those on our website as well. They're available in PDF for download. Next slide, please. So if you wanted just kind of a visual on what our office does, those are the four primary areas. So Greg Thorson is our Deputy Commissioner. The Deputy Commissioner has traditionally been tasked with overseeing the depositories. Ms. Balogun, who's here with me today, is the non-depository, and she handles that second column there. Sean McAvoy is the Assistant Commissioner for Consumer Services and Outreach and Data, and I'll tell you a little bit about that as to how we operate our office. And last but not least, Andrew will be our new student loan ombudsman, as well as handling our legislative tasks, which involve both not only working with the legislature here, you all, but also with the federal regulations and legislation, because we're very tied into that. Next slide. Okay. So, I'm not sure how many agencies come in and tell you about their mission statement, but I'm really proud of ours, and I think we did a lot of work. It was very thoughtfully done. We are Maryland's Consumer Financial Protection Agency. We came up with, and we believe that our mission is to protect Maryland consumers, as it says there, through the operation of a modern financial regulatory system. And I'll stop with those because those are really the two main concepts for our agency, right? We could stop with, we're just here to protect Maryland consumers, because at the end of the day, if you think about it, why do we have FDIC insurance, right? On your deposit accounts, we don't have FDIC insurance to protect the banks. We have FDIC insurance to protect consumers. That's a consumer protection tool. That's what our office does. But how do we do that? We do that through being what I call small but mighty. So as I mentioned, we have about 90 people. It's very professional staff. They're very dedicated. But the bulk of our staff is comprised of examiners, bank examiners, mortgage examiners, fraud examiners, money transmitter examiners. You get the point. We have 2 advice counsel from the Office of the Attorney General. We have a full-time litigation counsel. And then we have concurrent jurisdiction in a number of cases with the Office of Consumer Protection from the Maryland Attorney General's office. So there are times when we work with them as well on cases. We do our job, and you'll see through direct action and indirect action. We work cooperatively. That's very important since we're a small agency. We work cooperatively with our sister states, and we work cooperatively with the federal financial regulatory institutions. So I want to throw out a couple of acronyms because our field, banking, is full of acronyms, and some of these you'll hear and I think are important. One is what's known as CSBS, which is the Conference of State Bank Supervisors. That is a 120-year-old organization of state bank regulators that's designed and functions with the purpose of coordination and maintaining the dual regulatory system in the United States. That is an organization that lets us share information with our sister states and get information from the other sister states. At this time, I'm treasurer of that organization, so that allows me to learn from other states, get best practices from them, as well as to float up issues that are important to Maryland to make sure they get national consideration. The other one is the NMLS, which is the Nationwide Multi-State Licensing System. That's operated by a CSBS subsidiary, and that's an electronic system that's used to register and license all the non-depository institutions that we mentioned here. So, for example, mortgage companies go through, they're licensed and registered through that system on our behalf and on behalf of all the other states. So that's really a multi-state system that we have there. We also belong to other multi-state regulatory agencies for money transmitters, for mortgage regulators, things like that, that help us stay plugged in. So at the end of the day, we're deeply engaged at the national level, and that, like I said, has the ability to bring national thinking and solutions to us and us to share that with the other states. That's important because, as you probably recognize, many of the players in the financial services field are multi-state and multinational. So in order for us to really be effective with our staff, we need to coordinate with them, and we do that. And I think in the banking and financial services field, that is very integrated. One example of how this works, just real quickly, is CSBS has various districts. We're in District 1, which is the Northeast. And when I was chair of the District 1 committee, we worked to put together a climate change group, because we're fortunate we have New York, which has the Department of Financial Services up there, and they are well-staffed. They have, a lot of resources that smaller states, Rhode Island, Connecticut, us, that we don't have or can match them. So they were doing a big push, and they still are. They're recognized to be a leader on this climate change risk for financial institutions. So we asked them, can you help create tools and education for the rest of the state regulators so that we can, better understand what's going on in that sphere, and how do we, take that forward to the institutions in each of our states. So that's one way that, the states work together. Some people that have the ability can help others, and that raises the bar for consumers throughout the country. Okay. Next is accomplishing the mission here. I think I went through some of that with the direct action I mentioned. We conduct investigations, we do litigation, we do enforcement, we respond to consumer inquiries, traditional consumer outreach and education. We do some indirect actions, which I guess would be examinations. We examine banks, credit unions, we examine mortgage companies, money transmitters. We issue industry guidance and cooperate with our other areas. And then last but not least, we operate the modern financial regulatory agency, which I said. And the reason that's important is because when you consider what those words mean, it's that we're not a group that wants to sit and say, well, we've done it that way all the time. So by putting in our mission that we want to operate a modern regulatory agency, that means that we're always looking for the best, most efficient, effective ways that we can operate to protect Maryland consumers. Okay, so with respect to that operation, as I said, right now, all of our staff is fully capable of remote operations. It may sound funny to say, well, we have new AV equipment in there that enhances our ability, but that's really important, right, in this day and age when we're on the internet, to be able to not only produce but present information to people, make it easier for them to connect with us, make it easier for us to connect with our staff when we're out of the office. Particularly, for example, the Student Loan Ombudsman has put together a number of educational modules, and those are on the internet, and they're somewhat interactive, and we can use that. We have hired specialized IT examination staff, and we use those. That's modern, state-of-the-art. We're in the process now of working through the rollout of a what I call there a state-of-the-art, I think it is, monitoring technology for cybersecurity. So we're going to be putting that into effect later this year. It's going to help us take what we call a risk-based approach to best use our resources so that if we identify problems with the potential to cause real concern, we can focus on those as well. We use the NMLS, that's fully electronic. We cooperate, and then another thing we've done is we've put together an internal innovation committee that cuts across, even our office has some silos, so that gets together our directors to talk about important issues and identify how we can best deal with them. Okay, so I wanted to just give you a couple of 2022 highlights, so some things that high level you can take away. We are an accredited regulatory agency. We're accredited for bank and credit union examinations. We're accredited for mortgage regulation. And then we became the 7th state to be accredited for money service regulation, money transmission regulation. So that's important because that shows we're still striving to be modern, to be at the forefront of our sister regulators. We received particular accreditations from accolades from the accreditation team. We were really happy to see that for our education and outreach efforts, which we do a lot of, and I'll tell you a little bit about that. We participate in multi-state exams, and then we've used our enforcement authority as well, and that was recognized. Our industry regulation, we just revised some mortgage regulations that included financial responsibility, corporate governance, and safety and soundness standards. Those are important consumer protections because well-run institutions at least don't pose a failure risk. So, at that basic level, that's important to have, and there wasn't anything like that. We've adopted those standards. Our outreach activity, we've done that. We do some informational sessions for industry to make sure they understand what's expected of them. Each quarter, I hold what I call consumer regulatory outreach events with advocates and other folks that are interested to do that. We used to go to each county. We're going to start trying to get back to do that, to meet individually with folks in the counties to talk about what they're understanding, because what may be happening out on the Eastern Shore isn't the same thing that's happening out in Western Maryland. If we don't get consumer complaints, we might not know. But if we can go out and talk with local authorities, we can get some better intelligence that way. And then I mentioned the multi-state cooperation. That's been important because not only am I in a leadership position, but some of our other staff are in leadership positions as well. Okay. Yep. So depository institutions get a little more granular on one half. That involves the 21 banks and 7 credit unions that we directly regulate here. In the state, though, there's approximately 70 credit unions and 55 national and out-of-state banks. And the largest institutions are all those national and out-of-state banks here in the state. Our institutions, fortunately, right now are all well capitalized. They're growing. We believe they're positioned well to support the economy by providing loans and other services in 2023 and beyond. Let me see. So I guess it's important to note that because of the large number of out-of-state banks, the trends that happen to national trends that happen to them come into Maryland, right, through them. So it's not like our 21 banks are driving the bus. Generally speaking, it's the national trends that are coming into us, like a bank consolidation. We've just had 2 local banks consolidate as well, which gets us down to 21. So if we can go on. The banking hot topics, I just wanted to give you some idea. If you were to talk to some bankers here, what would you say? Number one issue is the cybersecurity. It's number one, I'm sure, for many other industries as well, but in the banks it's particularly important. Bad actors, whether criminal or foreign state entities, are constantly trying to attack our institutions, whether they be the banks or individuals, to use them to get into the banks. I mentioned that recognizing that, we've hired some staff that have specific IT experience. The CSBS has put together specific IT training for all the state bank examiners and non-depository examiners. They did over 1,000 examiner trainings during the pandemic. So that's a high, risk issue. The bankers are aware of that. We're on them. They know it, and they work hard to make sure they're prepared. Uncertain economic outlook. Not sure how to say it any better than that. Right now, some things look good, others look less so. The Fed is tightening. With the Fed raising interest rates, one effect of that is that people take their money out of the banks and they like to put it elsewhere where they can get a better return. That's proves to be a challenge for some of our local institutions, because if you're a larger institution, you have an easier way to get money, and you can, attract deposits more readily than smaller institutions. Fortunately, right now, I think, though, all our institutions have adequate liquidity. We don't see any issues there. Loan demand is holding up, so that's great, probably because we have good state here. Credit risk right now is low. But, they're going to tell you, CSBS did a study of bank sentiment, community bank sentiment, which are the smaller banks, and that really was negative. So that's not a good sign for going forward. I mentioned environmental, social, and governance in there. That's an important issue. We've been talking to our banks about that, and I think, they would agree. So we have the climate change response. How does that impact the financial services field? Our office does not regulate securities or insurance, so that kind of takes it a little ways out of, our bailiwick. But as I mentioned, our office is working with the other states. We're working with, we're going to be, rolling out some information to our local charters on the climate change information. Fair lending and community investment. That's also an issue that, you'll be hearing more about that as well. It's important that, there be equal and equitable access to financial services throughout the state, so we're working with them on that. I threw in cannabis in there because as the legislature goes through, we want to make sure that our state institutions are able to fully participate and provide the banking services they need. And so just didn't want legislators to forget that there might be a little piece there. We just want to make sure we coordinate as best as we can with the federal law to make sure they don't run into any impediments. And then last but not least, you probably heard talk about fintechs or financial technology companies. everybody says that's like, a new thing or whatever, but really that is something that's been going on for years, right? IBM used to be a fintech company because they provided consumer services to banks when all they had was paper ledgers. Nowadays, it's just, exploded in scope and sophistication, but it's really no different. Banks and other lenders, I use banks kind of generally to speak to credit unions and other financial institutions, so I don't want to slight my credit union folks. But, they have a symbiotic relationship with some of these companies because they provide them with services, and at the same time, some of these institutions are, trying to compete with banks. So what we want to make sure is that to the extent they want to compete with banks, they do so in a properly licensed way that is respectful and, following Maryland statutes. Okay? Very good. So licensing and supervision, that is the other part of our office's jurisdiction, and, the numbers I'll give you right now will, kind of be eye-popping, right? This past year, 2022, 24,000 licensees. So on the bank side, 21 banks, 7 credit unions, 4 trust companies. On the licensee side, 24,000. That's up from 17,000 5 years ago. That showcases both the breadth of the jurisdiction on the non-depository side that our office has, as well as the challenges we face. So, when I say we try to run a modern regulatory agency, we need to do that in order to keep up with 24,000, right? That growth from 17 to 24. So, we do that. We use technology. We use the partnerships to adapt and carry out the missions. Out of that licensing activity, we put back $107,000 last year into the general fund. And what I would say on that front is, to the extent you or any of your constituents ever have any issues and they reach out to you, contact our office because, obviously we're the licensing authority. We have contacts with those institutions, and we can work that situation. So, next. Okay, let me just give you an example. I picked this because it's probably a hot topic in a different way. Money transmission, right? That's a new and growing area. That is a multi-state, multinational business. So, people transmit money all over the world. They don't necessarily have to be using a Maryland licensed entity. Could be licensed somewhere, Maryland-based entity. It should be Maryland licensed. A perfect example of how we regulate in the money transmission space. We examine them, but we work with other state regulators so that one company doesn't get 50 examinations. The states have gotten together. We've put together a program that we call One Company, One Exam. The regulators get together and coordinate, send in examiners. They do an exam that then gets sent out to each of the state regulators. So to the extent there are specific issues for Maryland, let's say, on an examination of an Arizona company, we then have our own examiner handle that little piece within the scope of the large one state, one exam. If you're trying to establish a money transmission business in the United States, you need to go to all 50 states and get licensed. So the states have bound together through different compacts where, we split the business, basically, the due diligence and things like that. You can go to one state which will act as lead. They will then parse that work out to the other states that are involved and get you a license. So that is, how the other states are force multipliers. We have a new initiative coming out now, some regs that will be coming out, I guess, in the coming weeks regarding money transmission. A couple of years ago, thank you to the legislature, you passed some modifications to our money transmission law. There is what's called a Model Money Transmission Act that a bunch of states are working on. This year, about 20-plus states are in the process of enacting that statute. We, through our office, was part of the group drafting that. And so last year, we came to the legislature, and the legislature approved a series of amendments to Maryland's money transmission law that got us closer to what was eventually issued as the model law. So we're pretty close to having adopted it. Whatever we need to get adoption of that, we're now in the process of issuing regulations so that we harmonize Maryland law with the rest of the states, which makes it easier. Simple example of that, Maryland had a statute that required that money transmitters submit a biannual report of condition. And it wasn't electronic, it was biannual, whereas through the NMLS, everybody else was getting, all the other states that is, were getting quarterly electronic reports. So they could download into a spreadsheet, get the information, and go forward. And we had this oddball paper requirement. So part of the model law is to make that make the electronic submission quarterly standard. Now we have that, so we're able to benefit from that. And again, you know, that's a force multiplier for us. It's an efficiency matter as well. And then, you know, next, sorry. So on the consumer protection front, that helps us actually, you know, work with other states when there's issues. We're winding down now where we began, consumer protection, right? So we remediate harm and try to avoid it through our supervisory and enforcement efforts. We work closely with the federal agencies, particularly the Consumer Financial Protection Bureau, which you know, handles most of those non-depositories. We have 2 banks that are also subject to CFPB examination at this point. They don't fall under that until they're over $10 billion in asset size, so we're there now. When your constituents call, we have a consumer services unit, which distinguishes us from the federal regulators. We actually have examiners in our office that when you send us a complaint or a consumer complaints, one of those fraud examiners will review that. They'll go to the company and they'll try to work a resolution and, you know, get to an understanding of that. And let me tell you one real quick anecdote as to how that works on the consumer protection front, because an individual calls our office, had a problem with the late charges on their account. So we did investigation through our office, and we determined that we asked for the particular loan agreement so that we could read the loan agreement, what was the responsibility of the lender to charge, and what the consumer was being charged, and they didn't match. So we went back to the lender and we said, how come, yeah, you're wrong, doesn't match. And it turned out that they had had a systems upgrade earlier in that year, and a box had not been ticked to set up their system with this particular late charge calculation. So, you know, through that one complaint, we were able to fix it for that consumer, and then our consumer services unit sends that over. Obviously, they talked to the institution and they said, this has to be fixed not only for the one consumer, but you now have responsibility to the others to remediate the damage done there. That then goes to our examination unit so that we later, when we go back in to examine that institution, we can make sure that they actually did that. So, you know, that's how that's important to get these consumer complaints and how we work together to do that. Another example of that is when we receive complaints. Did we get to the next one where we go to the next slide real quick? So this tells you about consumer complaints and some of the numbers, right? At the bottom of that, it has non-jurisdictional. And I've jumped ahead here. What that means is, I mentioned there were 55 out-of-state banks and other credit unions that are out-of-state. We don't have jurisdiction over them, but we do get complaints because consumers aren't going to know necessarily that our office doesn't have jurisdiction. So what we've done is we've created what we call escalation contacts in these institutions, so that when a consumer calls, if we don't have direct jurisdiction, we escalate it to a person at one of those entities, and we forward it to them. We say, hey, we've received this complaint, you know, can you deal with that? And then at the same time, we forward it on to their regulator, typically the OCC or the National Credit Union Administration, because they may want to know about that complaint, keep their statistics and everything. But we do try to do what we can, you know, at our local level. Can you go back one just real quick? Okay. So I wanted to talk about consumer protection because we also have an enforcement unit. You know, that's the hammer. They investigate fraud-related issues. They conduct specialized investigation involving licensed and unlicensed and illegal other activities, improper business activities, or violations of law. And then through that activity, we obtain monetary recoveries for consumers, or we seek remediation wherever we can, and we appreciate the fact that a couple of years ago the legislature raised the penalty amounts, which is you know, very helpful. So that's all intended to prevent future misconduct. Okay, so that's the slide. And then fiscal year 2020, 2022, just some numbers there. We ordered you know, over $1.1 million in restitution payments. Our consumer services unit alone, through complaints from consumers, recovered $120,000. We have a couple of large cases going on against out-of-state lenders, some tribal lenders that are trying to come into the state of Maryland using out-of-state banks or online lenders to go over our rate caps, our interest rate caps. So those are ongoing matters right now. The student loan ombudsman I mentioned, that we upgraded the curriculum. We've done a number of videos. He has gotten good communication with alumni groups and things like that, so he's part of the network. Also part of a national network of ombuds people that work closely with the U.S. Department of Education. And as things settle out on there, we'll be working to make sure we push out information. And as I mentioned, last but not least, we have the outreach activity. So whenever there is a notice of intent to foreclose, our office sends out information to the people who are, now hopefully not, but starting down that foreclosure path with resources that are available to them. Last summer, we put together a group of advocates, industry, folks from our office, folks from the Office of Administrative Hearings, so that we could tweak that and come up with, the best possible simple information for individuals. So that was really a good way to get everybody together to talk about the process and make some changes without need of regulation or law. Last year, we mailed over 49,400 packets directly to folks at risk. So that's quite an effort for our office. And with that, here's some contact information. We did a handout of some highlights there. That's also electronically available on our website. I appreciate the opportunity to be here. Thank you very much, Madam Chair.
Thank you, Commissioner, for that presentation and valuable information. I see Senator Kramer and then Senator Ellis.
Thank you, Madam Chair. Commissioner, nice to see you, sir. Thank you for all the good work you do. Very much appreciated. Yours is a very important role in your agency, and I know Andrew has worked with me and with my office on issues in the past, so thank you for that, and been very helpful providing information and guidance. One of the things that I remain concerned about typically we don't regulate when it's a business-to-business relationship that somehow, if it's a business, regardless of whether it's mom and pop or otherwise, there is this expectation that there is a level of sophistication that government doesn't need to get involved with regulation, and quite frankly, very often that's not the case. And in that regard, I'm just curious, on one aspect of commercial lending, there are some federal regulations that afford a consumer who has money, and this goes to your cybersecurity as the first bullet point the banks are looking at, where a consumer whose account is hacked has some limited opportunities to try to get their money back. For the most part, and I don't think most people understand this, the banks don't have liability for the money that is stolen. And particularly with commercial lending, you could have the neighborhood dry cleaners, their account at a bank gets hacked, they lose everything they have, and typically speaking, the only liability a bank has is if they're notified within a 24-hour period, they have some liability for replacing those funds. After that, that small business owner is out of pocket. Are you familiar with any states taking action in this area, saying, hey, you all do have some or should have some responsibility? You talk about what banks are doing to protect themselves from cyber attacks. What is their motivation to do so if they don't have responsibility for the money that people think is safe in that institution after it's stolen? And the bank goes, yeah, we're really sorry about that. Have a happy day, and it's been great working with you. Are you familiar with any banks any states working on that issue, and whether, looking to address protecting the account holders? And is there any responsibility or any requirement for banks to notify your office when this is happening and the frequency with which it's happening? And, you can identify perhaps there is one lending institution out there that's doing a pretty lousy job of protecting the bank accounts.
That's right. Well, so in the context of small business, right, that's kind of where we're looking right now. To the extent we're dealing with just the Maryland charters, so we're not dealing with a lot of the, larger
Right.
institutions that put together, let's say, that Zelle program for consumers, which has many of the issues that you say, right? So it's protected to protect the banks, but not necessarily to protect the consumers. I don't know that people
Precisely.
totally understand that. Yeah, no, I understand that. I'm not familiar with any states that have pushed, their statutes out right now to protect the small businesses on that front. Right now, I mean, there may be, but I'm just not familiar with that. If you're a small business, I guess the banks do offer products and, with positive pay and with different features that are set up to prevent fraud. And I know that, their rights vis-à-vis the institutions are typically governed under the UCC because there is no
Right.
federal standard that really extends that to to small businesses. Education, that's important. So you're right, on the level of sophistication, many folks that run small businesses aren't aware of that. So to the extent they could be made available or made aware of, what they need to look out for, that would be important. Our state institutions, though, to the extent there is a hack, they do report to us, and they are required to do that.
But if they're federally chartered, they
do
don't
not.
have to do a thing for
No.
you all?
No. Now, they may have to report to the Attorney General's office under the breach reporting. I'm just, as I sit here now, I'm not 100% certain on that front.
But you couldn't go and, through regulation, or we could not through statute, say they need to do this because they're federally chartered, they're not state chartered.
They would
et
argue
cetera. So-
preemption. That's right. Yeah.
Okay.
That would probably be a fight whether or not that was a consumer protection law that might be exempt from preemption, because the state does have some rights vis-à-vis national institutions, but once you get into the operations of national institutions, preemption starts getting stronger, and the question is, where would that fall?
Okay, thank you. Thank you,
welcome.
Madam Chair.
Thank you. We'll go to Senator Ellis, Senator Mounts, and then Senator Lamb.
Thank you, Madam Chair, and thank you, Mr. Salazar, for your comprehensive presentation. So I have a couple questions. Hopefully they're quick questions. So the first question, what is the advantage, or is there advantage for Maryland citizens to use a state-chartered bank or state-chartered credit union?
Okay. Well, first of all, it's local, so all our banks, yeah, I would guess that you could get to, their top levels right away. Because they're all locally managed, they're small institutions, everybody's here. You try to reach out to one of the large nationals, you may have to go down to Charlotte, you may have to go to New York, some other state. So that is a primary one. Number two, I think it's probably easier for them to know you as a business or an individual if you're trying to get a loan, because they are local, they know their people, they know their communities. Those are really the primary ones. And they might have some more flexibility to tailor tools and products that, a larger institution, they set up a program and, we try to get people into that program, whereas the locals should be making more accommodation. I think they are.
Yeah, great, thanks for that. Second question is, you mentioned in your briefing, Maryland state institutions work in the cannabis business. So I think most of us know that there are a lot of federal restrictions on cannabis businesses as far as income getting into the federal system. So the tie into federal banking system with state institutions, what are the limitations now? Could, say, Maryland companies who are licensed to grow, sell recreational in the future just go to a state chartered bank and have a regular deposit and commercial interaction? And what's the interaction with that tie-in of the state bank to the federal, payment,
Sure.
et cetera? And is there a brick wall that prevents certain interactions? Could you get into that a little bit if you can?
Well, sadly, yeah, the federal agencies haven't followed or taken the lead from the states, so many states like us have now made that legal. In the state of Maryland, we do have two institutions that are banking cannabis businesses, but I guess if I strictly answer your question, because I thought it was interesting, can they have a regular relationship? No, they can't have a regular relationship, because at the federal level, as you know, that's illegal still, so they haven't gotten their act together, I think, on that front. So the banks, local institutions can bank them, but they have to navigate a very narrow path. In terms of safety, compliance, reporting of suspicious activities, things like that, to make sure that there's no connection with any illicit activity. They don't plug into, my understanding is, the federal system. It's still pretty much cash-based, and it's expensive because the banks and the ones that I understand that are doing this have to set up a whole control regime. And so it's difficult. My point on that front was, we just want to make sure that when we formalize our schedule, we put in that, Maryland institutions are authorized to do that, because I worry that the federal government might come up with something that says, unless otherwise authorized by state law, and our state law, if it doesn't have an authorization, might run into this kind of weird situation. So that was kind of where I was going with that.
So can you name those two institutions that work with cannabis companies?
Well, I'd rather not at this point.
Maybe offline? Okay.
Yeah.
Yeah, so, okay, sorry.
One's a state, one's not a state charter.
Okay,
I do know that.
yeah, okay, great, thank you.
No problem.
Thank you, Senator. Senator Mounts?
Thank you, Chairman. I was interested in the discussion about the regulation for financial services.
I'm sorry?
Financial services,
Okay.
because I've participated in some briefings before, but which financial services come under your jurisdiction for regulation?
I guess I would say, it would probably be easier to say all of them.
Okay.
Mortgage lending, the whole 9 yards, other than insurance and securities.
Yeah, and this isn't a gotcha question.
Uh-huh.
I just was listening, and
Right.
I was sort of mentally connecting the dots, and I probably already should know the answer to this, but I saw where a number of the complaints were student loan complaints.
Correct.
And so automatically I thought about that 529 program, and is that under your purview?
No. We just have the ombudsman, so the ombudsman job is to act as a liaison between student loan borrowers and the student loan servicers who collect the money. We're not part of the 529 system.
Right. And do you think you should be?
Well, obviously, that's a legislative decision. Our ombudsman is designed to work with the borrowers, and that's a payment mechanism, so I guess I would say no.
And I just jumped in the deep end, so I might as well keep going, right?
Sure.
So mentally, I was thinking about this, well, I guess, so unemployment, that's not something that when people have complaints about unemployment and things like that, that's completely outside.
That's right. That's another sister unit in the Labor Department.
I told you I jumped in with the first question, and I'd just keep going, but.
That's right.
But it was interesting, that was, so you are, that's just, your role in the student loan complaints and student loan issues is limited to disputes between the borrower, the student borrower, and the lending institution.
Correct.
Okay.
Correct. And
Thank you.
the collecting. And we provide outreach and educational services on student loan issues
Okay.
to borrowers.
Okay. Well, I've got everybody to giggle this afternoon. So, well, thank you.
Thank you, Senator. We'll go to Senator Lamb.
Thank you, Madam Chair. had a question, I guess, on page, I guess the slides aren't numbered. You cited the fact that there were now over 24,000 businesses, individuals, and that was up from, I think, about 17,000.
Correct.
The year before. Go ahead.
5 years.
Oh, 5 years ago, okay. Can you explain maybe why that trend seems like it's increasing quite a bit like that?
Sure. Mortgage.
Oh, just mostly driven by mortgage?
Mostly driven by mortgage.
Okay.
Yeah, that's the bulk of it. Money transmission is up percentage-wise. I mean, in our state, we're under 200, so it's gone up 13 to 15%. But it's mostly mortgage loan originators and mortgage lenders. And now that is reversing, right? With the rise in interest rates, you're getting less people getting into that business.
Got it, okay. And I'm not sure if this was addressed by what Senator Kramer was asking about earlier, but I guess nationally, there's been a lot of concern with Zelle and similar kind of apps that use like text messaging, and they're actually owned by the banks on the backside, but concerns about fraud and consumers being defrauded of significant amounts of money. Whereas fraud that occurs through traditional kind of banking mechanisms that have been more longer established, I think under Regulation E from the federal side, there's the ability to kind of pull that funding back if a consumer was defrauded, where there is not that mechanism for applications like Zelle.
That's right.
Is that something that the state can be involved in or cannot because of federal preemption? Is that where the federal preemption?
That's
kind of
probably
comes
going to
into
be an issue that's federally preempted, that's
Okay.
right. I mean,
All right.
because the owners of Zelle are mostly the large national banks. Now, some, not to say that smaller banks aren't getting together and putting together their own programs, which at that point might, raise an issue where we could deal with that, but generally speaking, that's a federal issue.
Got it, okay. And
We,
the
so,
last question has
Yep.
to do with obviously, the Office of the Attorney General has their own consumer protection division that handles kind of a different jurisdiction of areas in some sort. If there are folks that are our constituents that call, and they may not know the difference between what falls under your office and what falls under the Attorney General's Office Consumer Protection Division, is there some type of transfer or warm transfer that goes on, or do you just refer them back to, how do you handle
no, there's a
some of
warm,
those?
yeah, there's a warm transfer. So if it comes into the CPD, they'll call us. We typically get it because we're the licensing and regulatory office, right? So we're going to have jurisdiction over most of the issues that a consumer has. CPD is more unfair and deceptive practices. They're a little higher, and they have a mediation unit. So, we're similar but a little different, but we do have a warm handoff, and we work closely with them. I work with Bill. If we have a bigger case, we communicate with them and say, hey, we need help. We're working with them right now to try to, get some subpoenas and things like that. So, yes, short answer, yeah, we work closely with them. If you were to send it to us and we were not to be able to deal with it, we'd shoot it to CPD.
Got it.
And I know they do that for us as well.
Okay, all right, thank you.
Yeah.
Good presentation.
Thank you.
Madam Chair.
Thank you, Senator and Senators, for this final day of briefing as we prepare to start our bill hearings next week. Thank you, Commissioner
good.
Salazar, for closing us out and providing this valuable information. That concludes the briefing from the Department of Labor. Colleagues, we will not meet again in this room until Tuesday of next week. So wish you all, I know. But I'll miss you all as well, and see you next week. Wish you a safe, healthy weekend. If you need something to read, yes, please stop by my office. Have a great weekend. Meeting adjourned.